Good evening, traders. It is Wednesday, February 19th, and that means that it's time for my weekly swing trading video. We are going to try and pick up where we left off. 2 weeks ago, I gave you a swing trading video, 8 bullish put spreads, 8 winners. Last week, I knew I had a tall order. I had 6 bullish put spreads, 2 bearish call spreads, 8 winners again. Let's hope that I can repeat that one more time here. We got a nice market tailwind. We'll start with a market analysis. We'll take a look at last week's picks, and then I'm going to have a bunch of new picks for you this week. I think I got about 6 bullish put spreads, and I do have about 5 bearish call spreads. So we're seeing a few stocks that are a little top heavy in here. I don't like fading this market, but you can see here from the very, very tiny bodies on the SPY chart that the intraday ranges are very, very compressed. And look at this. In the last week, we really haven't gone anywhere. So the market is starting to consolidate at this high, starting to digest gains. Am I looking for a big market decline? No, I don't see that in the cards right now. I see that every dip has been bought. So as long as that stays in place, we know that bullish put spreads are really the way to go. But I also think that some stocks have run up pretty far and they're looking a little bit top heavy, and I don't know that they'll have enough gas in the tank to challenge those highs. So I'm also looking for opportunities there. So if we take a look at this was the coronavirus. There has been a pattern that has set in. This was a Friday. There's your Monday gap. You can see how the market rallied back. And then Friday, another sell-off. Monday we come in, recover some of that, recover all of it by Tuesday. We had another similar pattern. There's a Friday right there, red candle. Market sells off, a little jitters into the weekend. We don't know if this breakout here is going to hold. Monday, market opens, zoom, higher. So we had exactly the same thing yesterday. Little coronavirus worries on the open. Market sells off. Market recovers most of the losses. Today, we've recovered all of those losses. So that pattern may continue again this weekend. Right now, the coronavirus is being completely discounted by the market. So it's not having any real impact. Investors are willing to ride out the speed bump that might come from the coronavirus on the notion that their alternative is to go into the bond market where yields are producing negative real returns because the yields are not keeping pace with inflation. Well, who wants to be in that investment? Not me. Should I go to cash and try and time the market drop and time when to get in? Nah, I think I'll just stick with it. Asset managers are kind of in the same camp. They're not worried that they're going to miss this rally. So they're not chasing stocks, but every time we get a little dip, they're right back in there, right back in there, right back in there. So I really view the market as just going sideways for the next month or two. Now, Apple did warn, and they did say that they're going to miss revenues, but until the market has some concrete evidence, some absolute numbers, profits are going to be down 20%, revenues are going to be down 10%, whatever those numbers are, until the market gets that evidence, it's not going to worry about it. And we're just getting through earnings for Q4. So it'll probably be another month and a half until we start getting some clarity, perhaps some warnings. Well, what does that mean? That means that for the next 2 or 3 weeks, we keep selling these bullish put spreads as close as we can to expiration. So you'll see today, really looking for trades that are inside of a 2-week window. We want to take advantage of that accelerated time decay. There are some trades that are going to expire a week from Friday. So we're only in that trade for 7 days. And we keep rolling these positions. We keep reevaluating and rolling and rolling. Day trading's been pretty tough. So I really suggest for those of you that are day traders, make sure that you've got some bullish put spreads on there. Even some pretty decent spreads that we can do on the weekly options that only last 2 or 3 days. So those are also good plays. And the one thing that we've seen, just going to talk a little bit of day trading here, is these gaps higher. So you get the gap higher compression, gap higher compression, gap higher compression. If you don't have some overnight exposure, it's going to be very, very difficult for you to make money. So I would suggest having some bullish put spreads on. I'm looking at this 333 level, which is right about here at the prior breakout, as the major support level that I really want to hold. So that's about 50 points away from where the market is currently. And we really haven't seen any 20, 30 point drops. I'm not saying that we can't have any. We certainly could. We know what those look like. So if we start to break down and we get one of those nasty little drops and this breakout looks like it's going to fail, then we need to buy some VXX to hedge our put positions. As long as we get a day, 2 days, 3 days out of these positions, time decay will already be working its magic and the positions will be much, much easier to manage and we'll already have profits in them. So I know that the market looks a little bit lofty, a little bit overextended. Sticking with this strategy, we're going to add a few bearish call spreads to the mix as well. I'm going to show you something pretty cool. I've got so many things coming up in the next month that it's very exciting. For you swing traders that are out there who are interested in Option Stalker, but you don't need the chat room and you don't need all of the searches, I'm going to have a version available and the price is going to be pretty greatly reduced. The Ameritrade API is working really well. We've got an API with interactive brokers. We have an API with Tradier brokerage, and I'm going to be adding an API for E-Trade. So you'll be able to access Option Stalker through a lot of different brokerage firms, and I'm hoping that when Ameritrade merges with Charles Schwab, that we're able to actually service Charles Schwab accounts through that Ameritrade API as well. We'll see. But for right now, you'll notice that in this version, and I'm running the new version of Option Stalker, which is scaled back. The old Option Stalker will be called Option Stalker Pro because it'll have everything. But for those of you who are swing traders, if I go into the scanner, you'll see that some of the day trading scans have been pulled out of here, like heavy volume, relative strength 30, really things that we use intraday. So you won't have those in this version. If you click on custom search, you'll also notice that the shorter time frames are missing, but all the criteria down here are still available, and you'll be able to use 2-hour, 4-hour, and daily scans. So you'll be able to use all these fields. This is primarily what I use anyway when I'm looking for swing trades. And if you've watched my previous videos, you see that one of my favorite searches, I just come in, show me a trade signal on a 2-hour, 4-hour daily basis, give me relative strength, 2-hour, 4-hour daily basis, and let's look for some good option liquidity, go with the rating of 3 or higher. If I just use this scan, these are all going to be excellent candidates. Maybe go stock above prior day high. I can start to narrow the list down dramatically, but you can see these will all be excellent bullish put spread candidates. So without further ado, those are some of the changes that'll be coming. And like I said, the scaled down version, which will become Option Stalker, will be available for a greatly reduced price. It will not include the chat room. So if you're not a day trader, you really don't need the chat room. I forgot to mention I'm going to be adding a really cool table that will highlight all the trades that I'm going to be posting tonight, and you'll be able to one click enter trades with this table as long as you have that brokerage interface. So it'll make it super easy, and I'm going to make it so that the trades route to your broker. They'll be GTC for one contract, and they'll be for a credit, which is the difference in the strike prices. There's no way you could ever get filled on that trade. And the next day, you'll be able to see it on your phone. You'll be able to adjust the quantity, check the stock, adjust the credit, and enter it very, very easily. So really trying to accommodate swing traders. I hope you like the changes. Look for this coming up in the course of the next 2 weeks. And this table I hope to have ready in 2 weeks. Tonight, I'm going to be testing a new auto-generated email, and I'm going to send it out to all the members as soon as the video is posted to YouTube. It's unlisted on YouTube for 3 days. Then I release it so that email will remind you to watch the video tonight. We'll see if that works. Hopefully won't have any issues with that. Let's go ahead and take a look at the trades from last week. We'll knock through those and then we'll find some great trades this week. AMD. So we were selling a bullish put spread below this breakout right here using the 54, 53.50 strike price. Boom. Beautiful. Beautiful. Awesome trade. That you probably should be buying back for pennies. ATVI, we were leveraging off of this breakout right in here using that $62 strike price. Super nice. Hello. Really nice breakout, stock grinding higher. And yes, many of these you could have just bought calls on, but that's a lower probability play right now. We don't have a market tailwind, so we need to kind of play it safe and sell some of these bullish put spreads. Some of you might be thinking, gosh, Pete, you're going so close to the money. If I run this through all my probability analysis, the probability of success is very low. That's just from a purely statistical standpoint, but those pricing models do not take a look at the things that we look at: relative strength, breakouts, technical support, volume. All of those things are not factored into these option pricing models. That's what gives us an edge. And that's why we're having so much success. We know what to look for. Option Stalker is delivering these to us. CI, another beautiful one, leveraging off of this breakout right here at the 212 level, gapped higher. It's just sitting there. Wonderful. Perfect. Tick, tick, tick. Watch that premium collapse. ETSY, beautiful breakout right in here using that $52 strike price. Nice shape. Those options are whittling away. Twitter, really nice. Put that major moving average up, the 100-day, get that 200-day up there. So here you can see we were right there, and I said, man, I'd love to see that stock hold that 200-day moving average, and if it does, then we want to sell that bullish put spread right there. Super, super nice, and look at that stock take off. Twitter's actually been nice from a day trading standpoint too. Really like that stock. Mind you, every single one of these bullish put spreads that I'm showing you, we did these for a credit that would generate a 25% return on the margin that we put up. So this is not small change. We're getting some really, really nice returns out of these. WYNN. Now this is a longer term one that I had put out there. This still has about 2 weeks left, but we were selling down below this 200-day moving average at the 122 level. Love it. Love this one. Tails under body, stock trying to get through this horizontal resistance. I actually like WYNN from a day trading perspective too. I think it's got a nice head of steam in here. So WYNN looks really good. So you can see that the stock does have some volatility intraday, but we're so far away from that 122 strike price that this is in super nice shape. It's sold off on coronavirus concerns. Little update there. We're seeing the rate of increase decline. There are fewer new cases day to day. So coronavirus seems to be, I hate to say under control, but it seems like it's at least manageable right now. Perhaps in another week or two, China will know what the full economic damage will be. It was extremely untimely for them coming during the Chinese Lunar New Year. So WYNN in great shape. Now last week I did also put up a couple of bearish call spreads. So I'm going to go into the February 12 bear, and Lyft was one of those that we sold, and we were leveraging off of that 200-day moving average and that negative earnings reaction, and this is where the video came out, and I said, yes, let's sell that $51, $51.50 bearish call spread. That is in beautiful, beautiful shape. Stock finding a little bit of support down here on the 100-day. Would I buy it now? Well, it's a pretty choppy stock. I would need to see it spend more time there. We've got a little bit of an upward sloping trend line here that we can draw from back there. I'd like to see that support hold for a bit, and then I might consider it. But after heavy selling like this, we need to be careful that the stock doesn't just bounce and then reverse break the 100-day moving average and continue lower. So we don't have enough information yet. All I know is that bearish call spread that we sold on LYFT, very nice. MSFT, here we were leveraging off of that big bearish, almost bearish engulfing pattern right here. Not quite, but pretty close. And that heavy selling as the stock tried to make a new high. So you can see the stock is gradually grinding higher, and that's why I kept this one to a 1 week bearish call spread, because I don't want to be short Microsoft for very long. It is a super, super strong stock. And if you followed my bulletin in the Option Stalker platform and in the chat room, I said, you know, we had a profit in this, albeit a small one. I don't like the relative strength in the stock. Let's buy this baby back in. And it's still profitable even as of this recording. So it was a winner, but you can see how the stock has been grinding higher. We'll put up that 1 OSI indicator and you'll be able to see relative strength here late in the day with that line above zero, and that's on a 15-minute basis. And here you can see more relative strength in the last few days. So Microsoft's a strong stock. Will it get to 190 in the next 2 days? I don't know. It doesn't have far to travel. It's already at 187.50, so it only needs to go up about 2.5 points, and then we would be in trouble on it. So I don't want to deal with it. You know, if the stock were floundering around moving sideways, we'd have a great trade on. But with it starting to edge higher and with the market being relatively strong, let's buy it in. We did not want to have the stock go above the halfway point on this long red candle, but we had a few days that elapsed, and that made the spread cheaper and cheaper, and that's why we're able to buy it in for a profit. That's how all these spreads will work for us. So let's go into the trades this week. Boy, I got a lot of them to cover, and I actually had quite a few of them that I had to purge for liquidity reasons. And I'm going to go in and I'm going to click on Bullish February 19th. And I'm going to go through each one of these. And again, in the future, I'm going to have a table that's going to have the spread already loaded for you. You'll just have to click it and it'll route to your broker. That'll be super slick. I'm looking forward to that. So first one on the list is BSX. Let's see what we like about BSX. So we've got a pretty big drop here. Long tail underbody, 1, 2, 3, 4. Lots of support forming here. Lots of tails underbody. We've got the 200-day moving average, and we've got the stock putting in a nice day, breaking above this downward sloping trend line. So should find support right here. I like this level right in here. So on BSX, let's bring up the option table, which, by the way, all the order entry features, everything else, the intraday charts, everything will be working in the Option Stalker version designed for swing traders. We're going to go into BSX, and we're going to have to go out to March 6th because the stock doesn't move much, so the premiums are pretty tight. But here we want to look at the 4150s, and we're going to click on that bid, and we're going to click on that ask, and you can see that the spread is trading 1 penny bid offered at 13 cents. Well, you should know already that because we're doing a 50-cent difference between the strike prices that we're looking to get a dime for this particular spread. It's not quite there. We need the stock to pull back just a little bit. Well, given this choppy price action in here, there's a really good chance that that stock is going to pull back at least maybe to the 42.50 level. If it does, you're going to get a dime for this easy. We want to reach. We want to have to try to get these spreads off right now. There's no reason for us to chase things with the market being flat, with the market having run up so far. Let the stock come into us. We need to make it an effort to get into these trades, and it won't take a lot. So, to recap this trade, we like selling the BSX 4150 puts. We like buying the $41 puts, and we like doing it for a 10-cent credit. And if we're able to do that at 4150, look at us down here below that 200-day moving average. Yeah, I feel real good about that. Now, We do have to wait 2 weeks for this one to expire, but again, the stock does not move much, so it should kind of waffle around, flatline, hopefully hold that 100-day moving average and move higher. We're fine with it treading water. We don't have to have it go higher, but I think it might. I think it might start to grind a little bit higher. And almost in every instance, when I sell these bullish put spreads, I am looking for the stock to move higher. I am a directional trader, and my bias will be neutral to slightly bullish on all these. So BSX, first one on the list. Okay, the next one on the list, let's take a look at Facebook. So what's up with Facebook? Facebook, nice breakout right here. You've got resistance, you've got a compression right in here, long green candle, breakout to a new relative high. Everybody's excited about the earnings announcement. Get the earnings after the close. Whoa, not so good. At least the initial reaction. Now, after a big run like this and the stock almost going a little parabolic, you can expect that the expectations for earnings are a little overextended and that there's a little fluff that's going to be taken out. But the stock does find support well above that 100-day moving average, starts to rally, little bit of a check here, another negative day, finds support. Now we have this nice upward sloping trend line right here. And if I want, I can click on a GTC alert line, click on that one, click on that one. There's my alert line. You can see how it's extending up to this 212.50 level. Well, guess what? We like that 212.50 level because that also is this prior horizontal resistance level. If you visually draw a line through there, you can see that there is some support there. Well, hey, Pete, I don't see a whole lot that's going on in here. I don't know. That's a pretty close, that's $5 on Facebook. That stock really moves. Yeah, it does. We're not going to go up very far in this one. And as I mentioned earlier, I'm looking for some continuation in the move. I like this little breakout right up in here. I like these long green candles closing on their high. I think you're going to see Facebook go up and probably challenge that 222.50 area. So I think in the next few days, I'm going to have much more than 5 days worth of breathing room. I may have 6 or 7 points of breathing room plus a couple of days behind me, meaning time decay is already starting to happen. So let's take a look at those options. We're going to go out to February 28. And like I said before, 25% return in a week. Are you kidding me? Yeah, that's beautiful. We just need to be in the right stocks. And we're going to look at the 212.50s. We're going to be selling those. Going to be buying the 210s. 212.50 puts us right down here. We've got that upward sloping trend line that we're going to be leaning on and that horizontal breakout that's now support. You can see that that spread is 42 cents bid, offered at 47 cents. I'd like to get 50 cents for this. So that gives me my 25% return. Difference in the strike prices, less the credit received, $2.50 minus 50 cents. $2 is what I have to put up for this spread. I bring in 50 cents, $2 on a margin requirement. That's a 25% return. So let's recap this trade again. We're going to be selling the February 28 212.50 puts. We're going to be buying the February 28 210 puts, and we're going to be doing that spread for a 50-cent credit. And that was Facebook. Disney. Disney. Yowzer, this is kind of a negative looking stock. Yes, it is. Downward sloping, not so good. Earnings after the close right here. You can see that it opened higher initially and then a big drop after that earnings announcement. You can see here a pretty big drop too. This was related to coronavirus and them closing their Shanghai amusement park. So little negativity there, but they do have their online movie service up and running now, and they've had 26 million new subscribers, I believe. So really good success rate there, and that's what got everybody excited back in here. So they still have that working for them, and coronavirus is starting to settle down right now. I think you're going to see Disney rebound. I like this check of the 200-day moving average, and I like this bounce off of it with a close on the high or close to it today. I think Disney is going to start to rebound gradually. Well, as long as it just holds that 100-day moving average for a week, I'm happy. I just want it to hold that 200-day moving average, to be quite honest with you. And you can see there's also, that was a breakout right in there. That's been a support level. Stock gaps higher, checks it, it holds, takes off. So this price level right in here is not too far from that 200-day moving average. It's probably down to the 136 level. I like it. I think Disney's going to at least hold its own right here. Not expecting any big market moves. So let's bring up the option chains. I don't want to go very far out in time with this. And one of my premises behind this trade is that coronavirus is getting better, not worse. And we won't know the damage for probably another 3 or 4 weeks in terms of the financial impact. What did it cost Disney in terms of lost traffic? You know, they're not going to be able to quantify this just yet. So I don't think we're going to see any horrific moves lower. And we could even see a relief rally that it wasn't quite as bad as everyone expected. So we want to be below that 200-day moving average, which is at 139. So we're going to click on that. And then we're going to click on the 138 puts. Another neat feature in the option chain, I'm going to expand this a little bit so you can see it better, is that you can see the black line is the 100-day moving average. So when you're looking at option chains, you can see, oh, hey, that's pretty cool. Look, I'm selling that below the 100-day moving average. You can also see that the red dotted line here is a 1 standard deviation move. And you can see that the dotted blue line is a 2 standard deviation move. Really nice feature for those of you who like to sell credit spreads. So we're going to be selling the February 28 139 put. We're going to be buying the February 28 138 put. So $1 between the strike prices. Guess what we want for that one? 20 cents. You can see it's 18 cents bid, offered at 22 cents. Tomorrow, if the market opens a little soft, watch the stock. Try and get 25 cents for it. See what you can do on it. If the stock has really good relative strength and it looks like it's creeping higher, then I would not wait too long on that spread. So that's another really nice looking trade. Let's take a look at another one here. Go into EXPE. This is a kind of a wild one here. EXPE, look at this drop here from that earnings announcement after the close from 135 down to 95. Woof. Pretty bad. It's been able to recover, and it's actually been able to get through this horizontal resistance level and go into the gap. This stock is likely to continue to go into the gap. You can see earnings announcement after the close there. Flies through the 100-day moving average. Now it's starting to find some support. We've got tails under body. Probably may try and come back down a little bit lower. Maybe it tests that 100-day moving average. I don't think so. That's a really nice horizontal support level now. It used to be resistance, now it's support. So that's what we want to key off of. So we're going to be looking at the February 28, 115, 114, bullish put spread. Sell the 115s, buy the 120s. And you can see off screen, oh, hey, we got to get 20 cents for this. It's only a nickel bid offered at 15 cents. We're going to let the market come in. You can see the tails under body here. You can see that the stock moves around. It may try and check that 100-day moving average. We just want a little bit of a dip. If it's at 121.88 is where it closed today. If it comes down to 120, which is still within the range today, at 120, you're going to get filled on this for 20 cents. Almost could guarantee you that. And that's okay. We want to work for these. We want to have the stock come in. Now you can see here again, there's the 100-day moving average on the option chain. And you can also see that we are below that 1 standard deviation move. So that's also good for us. And there's the 200-day moving average. So we've got a few things working in our favor, mainly the fact that the stock is in the gap. It's got through this major horizontal resistance level, so we got that to lean on, and the 100-day moving average. I really like it. So recap very quickly, selling the EXPE February 28, the 115 puts, and we're buying the 114 puts, and we're doing that for a 20-cent credit. This spread expires a week from Friday, so we'll only be in the trade for 7 trading days. I like it. All right, let's keep going back. We've already done Facebook. Take a look at GRUB. So what do we like about this one? Well, we had a nice breakout right in here through horizontal resistance, and we actually filled in the gap. So that's kind of nice. And we've had the stock kind of move a little bit higher up to the 200-day moving average and then back off after that earnings announcement, but it came right back down to that 100-day moving average. This is a nice support level. So we are going to be looking at that support level for our trade. We may have to go out a little bit in time because you can see the stock is at 54.50 for us to get down to that strike price right there at the $48 level. We're going to have to go out in time. In fact, you can see the 100-day moving average is at 48.73. We're going to be below that even. We want to use that $48 strike price. Really nice cushion. Even if the stock comes back and bounces off that 100-day moving average for a while, we're good with that. So we're going to go out to March 6th expiration. So this trade would be on for 2 weeks and 2 days. Not too long to wait for a 25% return. And we're going to go into the $48 strike here. So we're going to click on that bid. And we're going to use the, I don't have a 47.50 on this one, doggone it. I'm going to have to look at the 47. So now I've got a $1 wide spread, and I can only get maybe a dime for that. It's a nickel bid offered at 20 cents. I need to be able to get 20 cents for this. So I like this spread. I don't think I want to go any closer to it, but if I felt comfortable with that $48 strike price, in fact, let's take a look at that $48 strike price. 48.50, 48. That still puts us in range. I might like that one a little bit better. Yeah, let's use that because look, we only have 50 cents between the strike prices, and that 100-day moving average is at 48.73, which is above this strike price here. So let's click it and drag it and click it and drag it. And you can see how the price adjusts. Very easy. The option order entry in Option Stalker is awesome. You can do multi-leg spreads so easily. Anyway, so let's look at this. We've got a dime right off the screen here. It is 10 cents bid offered at 20 cents. I would want to try and get 15 cents for this because off screen it's already a dime bid. So I would want to try and get a little bit more for it. The only exception would be if you see the stock really powering higher with good relative strength, then you might want to go in and hit this one. But I think you can get 15 cents for that. Let me see if I can just go in. I don't think I'll be able to go into the February 28th and get that kind of credit for this. So this is going out. Let me reset that. 48.50, 48. Take a look at what that is. So you've got zero bid offered at 10 cents. Now we're going to have to go out to the March 6th expiration. And we're just going to re-enter that to make sure that we're all on the same page here. Going to close that up. Go into March 6, 48, 50, and 48. So to recap, we're selling the GRUB March 6th 48.50 puts, and we're buying the March 6th $48 puts, and we're trying to do that for a 15-cent credit. If we can get that, that's going to be a really nice return, especially for a 2-week period of time. 15 cents divided by the 35 cents that you have to put up in margin. Gosh, that's getting pretty dang close to almost a 50% return. It's probably a 40% return. Really nice. So I like GRUB. I think that's going to be a really nice trade. Final bullish put spread of the week. Ooh, nasty, nasty. You can see TLRY, short covering rally. No, nah. Stock retraces all the way, but we have a higher low right here. Really nice support. Higher low, long green candle here, breaking through this downward sloping trend line here. I like it. I think the stock easily is going to be able to hold on to that $16 price level. And in fact, I highlighted this trade earlier. I did this trade in the chat room today. So only going to be in this for a week. We don't have to be in it very long. You can see the major support that we've got right down here at the $16 level. So we're going to go into the February 28 expiration, and we're going to click on the 16 put, click the bid because we're selling that. We're going to click the ask on the 1550, and off screen you can see it's a penny bid offered at 15 cents. Quite a wide market, but these options are more liquid than it might appear off screen, and anywhere in between you can start working that order. Probably, I'd say you probably get filled at 6 or 7 cents right now. So you're going to need a tiny little pullback in that stock. It moves to get filled on this one, but I do like it. And I actually like day trading TLRY as well. I think the stock put in a really nice day today. We'll go into that 5-minute chart, take a look at the action. You can see nice little rally here, compression, breakout, good action. Put up that SPY chart. Well, you can see by the orange line here, relative strength, relative strength. You can see the market tailing off here into the close. What's the stock doing? Closing on its high. That is a really good sign. Stock probably will open higher out of the gate tomorrow. If you see TLRY tomorrow open flat, really watch for that bid to be strengthening. You can see the good volume right in here. This stock is going to have a temptation, a tendency to move higher tomorrow. So it might check a little bit of the gains here, pull back maybe, down to the 1810 level or so, and then it should be resuming that rally. There's some buyers out there right now. So watch TLRY on a day trading basis tomorrow as well. Let me go in and recap that trade one more time. So on TLRY, we're going to be selling the $16 put. We're going to be buying the 1550 put. We're going out to the February 28th expiration, which is a week from Friday. So we're in this trade for 7 days, and we're trying to get a dime credit for this spread. So that's it. On the bullish side, I've got some bearish spreads I like too. And we'll go through those real quickly. A lot to take notice of. Now, caveat, strong market. We don't want to be doing too many bearish call spreads. So I gave you 5 to pick from. If you do 2 or 3 of them, I'm going to have to recap all of them next week as if we did all 5 of them. So it would be a fairly balanced approach to sell 5 bullish put spreads and 5 bearish call spreads. You would be market neutral, maximizing on that time decay over the course of the next week, in some cases 2 weeks. So pretty hedged approach. But personally, I would do fewer call spreads than I would bullish put spreads. First on the list, IBM. I got caught in IBM, kind of. I legged out of this very successfully, which those of you who have the research product, I posted pretty lengthy article today on how to leg out of spreads that move against you. I used that tactic on IBM, and here was the earnings announcement on IBM. The stock ran up on the news. Well, why did I get bearish on IBM in the first place? Well, you can see those gains were instantly given back. The market did not like IBM's earnings announcement, and it was starting to breach these major moving averages when we started selling the bearish call spread above this strike price right here. Well, then what happened? Then the CEO said that he was going to be leaving the company and retiring, and look what happened to the stock. Whoosh! It ran up like mad. So whoever they have at the helm, boy, I hope he does a great job, but the guy that retired has got to be a little sad that the market reacted like this. They get rid of him and the stock rallies huge. So I think that rally was overdone. I did have a chance to buy in my short calls, let it run, absolutely covered that trade, made some money on it. So that was a nice cover. You can see here, though, that we've got long tails above body, and the stock is starting to give back some of this, what I would call fluff. It is fluff. The new guy at the helm, could he do better than the old guy? Oh, yes. If I put up a 10-year chart of IBM, what the heck, might as well. There's a 10-year chart of IBM, and you know what the market's done in the last 10 years. Holy cow, this thing has been miserable. So the new guy probably will do a lot better, he or she. And but in the meantime, there's no new product. There's no increase in revenues. There's nothing going on yet. So I think you're going to see continued drift lower. Yes, maybe we poke up a little bit and then make a lower high. I think this high is in place. That's my theory behind this trade. And I like selling a bearish call spread on IBM. So let's see what we can get. In this particular case, we're going to go out to March 6th, and we have to get nice and high on this, and we're going to be looking at the 155, which is right around that 156 level, get as close to that high as we can. So we're going to be selling the 155 calls and buying the 157.50 calls. So we're selling the 155s, we're buying the 157.50s, 33 cents bid, offered at 43 cents. You know I want to get a 50-cent credit for this because we've got $2.50 between the strike prices. So stock's going to have to behave. It's going to have to help us out a little bit. Here's a mental stop that I have in place. And if you see this tomorrow, we don't really want to be in this trade. We got to be careful around that 153 level. We want that preserved. We want half of that long red candle to be preserved. We also would like this little downtrend right in here to be preserved, which is probably about the same price. So we don't want IBM all of a sudden finding its sea legs and rallying and challenging that high. I don't think it will. I think that reaction was overextended. All we need to do is to get a few days behind us, and I think that this stock will really start to settle in. Again, here's the earnings reaction. What is new in the company from here on January 30th to here on February 5th? Absolutely nothing. Absolutely nothing. Could the new person at the helm make some big changes for IBM and be really good for them? Sure they can. Absolutely. But as of right now, this is kind of a show me market. There's nothing there just yet. And I think you're going to see some people who wanted to get out down here at a lower level rejoicing that they've got a second chance to unload this stock. We'll see. I like IBM as a short. Selling the 155s, buying the 157s, going out to the March 6th expiration. Johnny John, we made some money on this on the long side. Really nice in here. It held that breakout. Loved it. Boy, that spread expired, but look what happened. The stock gapped higher, and now it's been in a steady trend lower. It's broken this nice steady up trend line right in here. That's pretty bearish. This is a failed breakout. Breakout, jumps higher. Now it's below that breakout. That presents an opportunity to us. So we want this downward sloping trend line preserved here. And we want this horizontal, used to be support. Now it's resistance for us. We want that resistance to stay intact. So we're going to go out and we're going to try and sell as close to this high as we can on the notion that after selling like this in a failed breakout that the stock won't have enough gas to get back up there. So we're going to click on trade options. This one does not have a lot of premium in it. So we're going to have to go out a little bit in time. This will be a 2-week spread. We're going to be looking to sell the JNJ 152.50s. And so we'll click on that bid. And we're going to be buying the 155 calls. And you can see off screen, 24 cents bid, offered at 47 cents. Not close to the 50 cents we want to get. We've got 2 weeks on this one, so there is time for the stock to move higher and get us that credit that we want. We don't really want to be moving much into this 151 level. Okay, we want that 151 level preserved, but we know we'll probably have to get up to 150 to get our credit. So a little bit of a bounce tomorrow would be nice. We've got a strong market tailwind. Stocks have been pretty resilient on the way down, so I would be looking for a little bit of a pop in the stock to be able to get that 50-cent credit and sell that near the all-time high. J&J, selling the 152.50s, buying the 155s, and doing that for a 50-cent credit, March 6 expiration. Roku, ooh, Roku, wild one. It is a wild stock. You can see this downward sloping trend line. It's actually more of a channel. So the stock has been in a steady decline relative to the market. So a lot of weakness there. You get this earnings reaction. Everybody loves it. Not so much. Stock closes below the 100-day moving average. Massive bearish engulfing pattern. No good. Back down below the trend line. Relative weakness the last 2 days. That 200-day moving average looks like it's going to get challenged. And if it did breach that 200-day moving average, who knows? Could actually have a nice short. Day trading wise, I definitely think Roku sets up for a pretty good short. So I'm going to be watching it. Let's see what we can do on the option side. We want to sell some calls on this baby. So I'm going to be looking to sell above that 200-day moving average, the 136 strike price. And we don't want to go up very far in time. This stock moves. It is a mover. So I don't want to be in it longer than I have to. We're going to be selling those 136 calls. Click on that bid. We're going to be buying the 137 calls in Roku. And we're going to be looking to do this for a 20-cent credit. $1 between the strike prices. We want to get a 20-cent credit. 12 cents bid, offered at 23 cents. It's almost there right now. Tails above body here. You can see the range that this stock has. It's got a big range. So you can get probably 20 cents for that, really close to it right now. So don't go in and pound this thing tomorrow. This is a bearish trade, for crying out loud, in a bullish market. Hold off and see how high that stock will bounce and see how much you can get for that credit. Who knows? Maybe you can get 30 cents for it. Maybe you can get 40 cents for it. The more I can get for it, the better. If I can get 50 cents for it, it all of a sudden becomes a 50-50 proposition. We just want to make sure. I'd like that 132 price to stay intact, which was the opening price from 2 days ago. So I'd like to see that maintained, quite honestly. I don't want the stock off to the races and then try and sell that one. Let's take a look at the intraday price action today. And there you can see. Look at that opening move. Boom, higher. It's got a big range. Look at that steady, steady selling, though, throughout the course of the day. Go into the 15-minute chart and confirm that steady selling as well. There you can see the reaction, steady drop. Then the next day, flatlines, cannot get off the deck. Gets a little bit of a bounce, and a little bit of a bounce gives sellers another opportunity to whack it. Boom, down. There's some selling pressure in this one. I like selling that Roku bearish call spread above that 100-day moving average. And again, we're selling the Roku 136 calls. We're buying the 137 calls. We're using the February 28th expiration. We got 1 week and 2 days for that to expire worthless, and we're looking for a 20-cent credit on that 136, 137 bearish call spread. We're almost done. We're almost done. I hope you're not getting bored. Got a lot of trades to go through. I could do less if you want to. You could post that in your comments. If it's too many trades, that's easier for me. But I want to give you a lot of stocks to look at, and the more analysis I give you, the more you start to understand the types of patterns that I'm looking for these trades, I think the better. So we're going to go in and take a look at Snap. Well, what's wrong with Snap? There you got earnings after the close. No good. Did not like it. Long red candle closing on its low. Stock does recover more than half of that red candle, but we're starting to see some tails above body. So we're starting to see some sellers come in and some relative weakness. So on Snapchat, I hope I didn't just call it Snapple. Anyway, on Snapchat, we are going to be looking to sell above that $18 price point. So let's put up the option chain. And we're going to go out to the March 6th expiration, and we're going to be selling the $18 calls, and we're going to be buying the 1850s. And you know that we want to get a dime for that. You can see it's 9 cents bid offered at 13. You could get a dime for this tomorrow. We just want this $18 price point to hold for 2 weeks. I think the stock is going to try and drift lower in here. So that's why I like it. If we just get 2 or 3 days behind us, the spread will be much easier to manage. And I think that this $18 level right in here is going to provide some pretty substantial resistance. So watch the stock. It does move. You can see the tails here. So you probably can get better than a 10-cent credit for this. You might be able to get 12 or 13 cents for it. Here, I don't really want to see the stock over $17.50. I want that resistance to hold the next time it gets up here, just like these sellers in here. I want to see them back and forth with another tail above body driving that stock down. One more stock to go. TSN. And you can see the earnings announcement here. Stock sells off pretty hard. It's below the 200-day moving average. Tries to rally a little bit, and it just slapped down today. It had a really, really nasty day. And on TSN, there we'd be looking at selling the $80 calls, which is right here, pretty close to the open today, and buying the $81 calls. So let's bring that up. We're not going to go out very far in time on this one. We're only going to go out 1 week and 2 days, which is the February 28th expiration cycle. And we're going to click on that $80 and that $81. So we've got $1 between the strike prices. You know that we want to get 20 cents for this. That spread is 10 cents bid, offered at 25 cents. So getting 20 cents, probably not going to be there just yet, but the stock doesn't move a lot. You can see it's pretty choppy. I think the stock is probably going to rally up. We would like to see this right here, that open right there. Excuse me, that low right there is 78.48. So let's call it 78.50. Kind of want to see that preserved right in there. I don't want to see the stock getting back above that point. So yes, it can rally a little bit, and we need it to rally a little bit to get our credit. But once we get that credit, we want to see it continue to drift lower. So again, we're selling TSN, the February 28th expiration. We're selling the $80 calls, and we're buying the $81 calls, and we're doing that for a 20-cent credit. I've just given you 11 spreads to look at. You got a lot of trades that you can consider this week, and when I do my analysis next week, boy, I bet you I probably will hit on 9 out of 11 of these. And if I have any issues on any of them, I think it's probably going to be on these bearish call spreads. But they all look like pretty decent trades to me. And the nice thing is that if the market stays flat for about 2 or 3 days, tick, 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 a lot of these expire in a week and 2 days. You're going to be able to buy them back even if the stock starts to move against you and starts to breach some of those technical levels that I had mentioned, and you'll be able to buy them back even at a small profit and let the other trades work for you. Just like we did with Microsoft. Yeah, I didn't quite like what Microsoft was doing. We'd had that few days behind us, and time decay was working in our favor. So even though the stock was creeping against us, we're still making money on the trade, even though the stock was moving against us. That's the advantage of using this strategy with accelerated time decay. Plus, you've seen all the different factors that I put into my analysis that would not be included in any kind of linear option pricing model. That's our edge. That's our advantage. Heavy volume, relative strength, trend lines, major moving averages, horizontal support and resistance levels. That's how we do it, folks. I've kept you for a long time. It's a really long video. I'm going to try and trim down the picks next time, but a lot of analysis. I want you thinking in terms of bullish put spreads, but I also want you thinking in terms of bearish call spreads, because there is going to come a time when the market starts to soften. You should always be looking at both sides of the market. That's it for this week. Look forward to seeing you tomorrow. Do our daily video. Good luck with your trades. Good night.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.